Welcome to the Weekly Trend Trader, how to do momentum trading. What we're going to do is we do each week, we're going to look at 5 hot stocks that are moving with momentum. Before we do that, don't forget to subscribe. If you have already subscribed, thank you ever so much for your support to the channel. To like this particular video and to share it with your friends, because you may have friends that want to create a part-time trading business, or they might want to become a full-time trader, and this strategy really lends itself very well to do that and work a job too. Don't forget that notifications bell, because the notifications bell is what YouTube use to tell you that we've uploaded the latest video. And the information that we're sharing with you is time critical information. So don't forget to hit that notification bell too. So we're going to look at 5 stocks, and our first stock that we're considering today is Tesla. Now, Tesla has been absolutely on fire. All 5 stocks have done very well, but Tesla has been absolutely amazing. And a lot of news-driven information has been coming out to push the stock that little bit higher. Let's have a look at the stock from the time it started to rise. Look at the 52-week moving average here. It started to rise around October last year. So let's begin our consideration there. We can see that candle there where it breaks through in October. We have a little run up, but then in November we have a 2-week pullback. That 2-week pullback gives us our entry. So we've got that 2-week pullback, and if we look at the RSI, this is in November 2019, 2-week pullback. The RSI has a rounding bottom. The rounding bottom, along with that 2-week pullback, gives us our entry. First week of December, it's a buy at $300 a share. So we're long at $300 a share, and then we get 1, 2, 3, 4, 5, 6, 7, 8, 9. And on that 10th week, it's a flat week. We leave it and do nothing that week. On the 11th week, we go up to $900 a share. Week after that, the market starts to pull back. Our stop is ready to take us out and take our profit. So we take our profits at $800 a share. Absolutely fantastic trade. Then the market falls back. February, look at that RSI. It's at the 95 level. Now 80 is overbought, but this is at 95. So we're seriously overbought. The market drops back. Whether there was COVID or there was not COVID, the market was overbought. It was going to fall back anyway. What happened? COVID accelerated the speed of the sell-off, but the market was already overbought. So we drop back. It is the COVID situation. We drop all the way back there to March. We drop back to that rising 52-week moving average. We can see there in March on the RSI, there's a double bottom in place. That double bottom there, as it starts to pull away, gives us a lovely little entry just there at $600 a share. We buy that one, we get 2 weeks out of it, and on that 3rd week, we take our profits at $700 a share. We've still got that rising 52-week moving average. Everything's looking good. The 2nd week, we get another red bar, but the week after, we go from $700 a share up to $800, and we close there, giving us another entry. So we're in at $800 a share. The next week is flat. Week after moves slightly higher, but it's a flat week, very quiet week. Then we get a low testing pin bar that bounces off the 800 level. Week after, we're at $900 a share. The week after that, we go to a high of $1,000 a share. Absolutely fantastic trade. Close down there at 900. Week after that, we make another bull move from $900 a share to $1,000 a share on Tesla. Then that next week, it's a red week, the first sign of trouble, a red candle. We take our profits at $950 a share. Fantastic momentum trade. Then the market pulls back that little bit, but we look at the RSI in June, the way it's pulled back off that red candle, we get a bounce the next week as that next candle goes from $1,000 to $1,200. It gives us another opportunity to go in. We buy this one. We've still got that rising 52-week moving average. We're in at $1,200 a share. We buy it again the week after at $1,500 a share. We add to that position. The market's on fire. It goes even higher. The third week it goes to $1,800 a share. It bounces off that 1800 level and closes at $1,500 a share. It's a red candle, so we take our profits. The next 2 weeks, well, there's a little bit of weakness there. It's the swing low. The market is falling back. Then we start to see a little bit of a base being formed at $1,400 a share. There's a rounding bottom on the RSI. There in July, we can see that rounding bottom. Price forms a bottom at $1,400 a share. Then in August, we're off again. We get that bullish bar that leaves us that goes all the way from $1,450 to $1,650. We buy that one there. And then last week we had that absolutely amazing move that went from $1,700 a share all the way up to $2,050, where Tesla closed at its all-time high. Now, as we look at this stock, not just Tesla, but the other 4 stocks too, this is the question on people's minds. Is this a bubble or are we just overbought? Well, look at the situation we've got. We've got that rising 52-week moving average. It's looking bullish. The move up is starting to look a little bit parabolic. Now, a parabolic move usually is when there's a bubble. However, how much and how quickly do we correct will tell us whether it's a bubble or we're just overbought. Look at the RSI. It's above the 80 level. Remember, 80 is overbought. What kind of correction do we get from this level will tell us whether this was a bubble or whether we were just overbought and we fall back to the 52-week moving average, which is still rising. So that's Tesla. Let's have a look now at Apple. So here's Apple, and let's consider Apple from a year ago. Let's look back at last August. Last August, firstly, let's look at the RSI. There's a clear double bottom in place a year ago in August. Then in the first week in August, there's a low testing pin bar right there that closes on the $200 a share level. So we're in on that low testing bar. RSI is giving us a double bottom. We're in. It's $200 a share. And we buy next week up higher, buy some more. The week after that, the market closes back red. We take our profits. Nice little quick momentum trade. But then the week after that, we've still got that rising 52-week moving average. We're coming out of a double bottom pattern. So we buy this one again. And we get 1, 2, 3, flat week, 4, 5, flat week, 6, 7, 8, 9. On that 10th week and the run, it's a red bar and we take our profits at $260 a share. Lovely move. But then we look at the RSI again. We look at the 52-week EMA. It's still rising. We look at the RSI. It's at the 80 level, but it's actually bouncing off the 80 level. So we've got a lovely little entry there. We get a low testing candle in the first week in November 2019. Sorry, the first week in December 2019. So it's the first week in December 2019, low testing pin bar, and we get 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. And on that 9th week, it's a high testing pin bar. It's red. We take our profits. Absolutely fantastic trade. Then the market hovers for a couple of weeks. But remember, we're above the 80 level. we're at the 90 level. Market drops back. There in February, the collapse begins. It's the COVID situation. All markets are falling back. The market continues to fall all the way to March, where the stock drops back to $210 a share. Then if we look at Apple, look at the RSI. The RSI there in March, we can see a sort of skew, if not quite straight shape of an inverse head and shoulders. That tells us to reverse this one. The market is again going long. So we've got the head and shoulders there. By the time that head and shoulders is complete and visible, the price is at $270 a share. So that week, that's where the market closes. $270 a share. We're in and we get 1, 2, 3, 4, 5. Flat week, 6. On that 7th week at $320 a share, it's a red candle. We take our profits. But then what happens? Well, the market is absolutely on fire. Look at that 52-week moving average. It's still rising. The market is bullish. The RSI is looking bullish. So again, that next week we get a green candle and we buy again at $330 a share. And we get 1, 2, 3, 4, 5, 6. On that 7th week, it's a red high testing pin bar. We take our profits and we're out at $380 a share. A lovely little trade. Then the market drops back to the swing low of $360 a share, dropping for a second week. And then what happens? Look at the RSI. There's a V-spike in July. This market is absolutely on fire and we know it. So we buy it again. The market that week moves from $380 a share all the way up to $420. We buy it. We're long at $420 a share. The next week it moves higher. We buy more at $440. The next week $460. We buy more. The week after we buy this last week from $460 to $500 a share and we buy it again. This market is absolutely on fire. And we're following this momentum trade. However, we haven't had that red candle yet to tell us to take profit. But are we expecting that red candle? Yes. Look at the RSI. Where is it? It's above the 80 level. Now stocks can get up to 90, 95 before they reverse on the RSI. However, this has had an absolutely fantastic run, Apple. We know we've had the stock split just like Tesla. It's had a lot of money and a lot of momentum behind it, a lot of speculation on the stock, but we expect that it will pull back. Again, the question is raised. Is it a bubble though, or is it just overbought? Well, looking at the indicators, it's overbought. The way we correct will tell us whether it was a bubble or whether it was just overbought. We've got that rising 52-week moving average. If we were to drop back even to the 52-week moving average and find support there, then it was just overbought. If we collapse through the 52-week moving average, then it could well be a bubble. So the way we correct will tell us whether this is a bubble or whether we're overbought. So that's Apple. Let's now have a look at Amazon. So here's Amazon. Let's go back a little bit on this one. Let's look back at, let's go to 2019, May, when the market breaks up there. Lovely little move. Market drops back. There's a V spike in May 2019, right at the end of May. There's a low testing pin bar at the end of the beginning of June, end of May. Low testing pin bar. There we go. You can see it there. And a V spike. Lovely little entry. So we buy this one and we're in at $1,800 a share and we get 1, 2, 3, flat week, 4, 5. On that 6 week, it's a red bar. We take our profits at $2,050 from $1,800. It's a lovely trade. Then the market drops back there. We can see in July the market drops back and we hit that 52-week moving average. But the 52-week moving average is kind of flat from July onwards. It's running right there through the price action, which tells us there's nothing really going on. What we're looking for is a lovely, clean bounce either off the 52-week moving average or a bounce off the 50 level on the RSI, or slightly above that. But we don't have either of those things here until January 2020. Have a look there. There's a multiple week run up in December. We dropped back for 2 weeks in the first couple of weeks in December. We dropped back. The market's at $1,800 a share. It moves that week from 1,800 to 2,000. Lovely little candle. We're in. We like the look of this bounce. We buy this at 2,000 and we get 1, 2, 3 weeks. On that third week, we get a high testing pin bar that's red. The week before we had a high testing, we tested those same highs at 2,200, but that was a green bar. We get a high test the next week that's red, which tells us to take our profit, and we do so at 2,100. Fantastic trade. Then the market drops back for the COVID situation. In fact, it drops all the way back to $1,600 a share. There we can see, looking at the RSI, look at March, there's an inverse head and shoulders there. Not the clearest one. There's an inverse head and shoulders, and also we've got a bullish engulfing bar in March. So inverse head and shoulders, bullish engulfing bar, gives us an opportunity to buy this one. By the time we can clearly see that right shoulder that's bouncing off the 50, we're at $2,000 a share. So we buy this one at $2,000 a share. We can see the pattern clearly now, and we get 1, 2, 3 weeks on that. After that third week, on the fourth week, it's a red candle that closes at 2,300, and we ring that cash register and take our profits. Then we can see in April, that candle causes a V spike because the week after we move back up and we can see the market building a V spike pattern for us. So we buy this one again. It's that first week after that red bar. We're at 2,400. It's the first week in May and we get 1, 2, 3. Flat week where we do nothing, but the stop takes us out and we take our profits. So our stop was at the low of the previous week, but it took us out, so we took our profits. However, this market is on fire. The 52-week moving average is still rising. This was a low testing pin bar, although it was red. Low testing pin bar shows us that there's future bullishness coming. It tested the lows. There was heavy buying on the lows that brought that pin bar all the way back up to where it closed. So we like the look of that one. The next week, it's a green bar. We're at $2,500 a share. We buy that. It's 2,500 and we get 1, 2, 3, 4, 5, 6 weeks in a row. On that 7th week, we take our profit on that red bar closing at $3,000 a share. Fantastic trade. And what happened for the next couple of weeks? Well, the next couple of weeks, we kind of was trading in a range between 3,000 and 3,200 and not really going anywhere. Every time we got up to 3,200, we had price rejection. So we tried to break through that 3,200 level until this last week. This last week, we managed to break through that 3,200 level and close at 3,300. Now, that 3,300 level has been prior resistance back in July, and that's where we stopped. Have a look at the RSI. In July, we were above the 80, which was overbought, which is why we dropped back and we struggled for those next couple of weeks. However, we've gone back there now and we're almost at this level of 3,300, back at the 80 level on the RSI, 80 being overbought. But remember, stocks can go to 90, even 95 on the overbought level before they correct. So one of two things is going to happen here. Either the market is going to fall back and trade within a trading range, or the market is going to do that little bit more and get that little bit more overbought, But either way, there's going to be some kind of correction because the market is getting too high on the RSI. And whenever it does that, the market corrects. Now that question comes up again, is it a bubble or are we just overbought? Well, this one says to me even more clearly than the others, this one is just overbought and it's pausing for breath. So that's Amazon. Let's move over now and look at Nvidia. So here's Nvidia. Let's again look at this one from about a year ago. Let's actually look at September. It's a nice point there as it breaks through the 52-week moving average that is starting to rise. So September 2019, have a look at the RSI. You can see there that the market moves through in August, comes back, bounce on that 50 median average level. From the 50, it bounces and starts to rise. That's the point that we're interested in. We get a 2-week pullback in September. Then we bounce. That bounce off the 50, we love that bounce off the 50. It's a very reliable entry point. We bounce off the 50. We're above the rising 52-week EMA. And we get 1, 2, 3, 4 weeks in a row. That next week is flat. So we wait and do nothing. The week after is flat. We wait, we do nothing. The week after that is flat. We wait, we do nothing. But the week after that closes at $210 a share. Following week, we get all the way up to $220 a share. And then we get a red low testing pin bar where we take our profits. But when we look at this one, look at December, we can see there's a V spike there because the next week we get a green bar. Remember, the previous week was a low testing pin bar. We were testing the lows. There was support there. The market went down there. The buyers came in and bought the market all the way back up to its highs, which is what caused the low testing pin bar. So the week after is green. We buy it again at $220 a share and we get 1, 2, flat week, 3, flat week, 4, high testing pin bar, and we take our profits on that red candle at $240 a share. Now, from that high testing pin bar and the red candle, look at what pattern it's caused on the RSI. Well, it's caused the RSI to drop quite heavily back over those 2 weeks. So we get another opportunity on that next week. It's a green bar. We've got a V spike reversal. We buy this one. It's at $255 a share and we get 1, 2, 3. We get a high testing pin bar and the week after that it drops through where our protective stops are and we take our profit at $280 a share. But there we can see from that high testing pin bar, along with what all other markets are doing, along with what all the other stocks are doing, that there is a problem in February of this year. And of course, there was the slowdown, the COVID situation, all markets corrected, and this stock, Nvidia, did exactly that. So Nvidia dropped all the way back to $180 a share. That was its swing low. That was its low. It held there. If you look at the RSI in March, we can see that spike as Nvidia drops down. Let me have a go at this one. The market starts to go again. So we have a go. We're liking the look of this one. So we buy this one long at $260 a share and we get 1, 2, 3 weeks out of it. Then on that red bar, we take our profits at $280. Nice little trade. Then again, we look at April, late April, look at the RSI. We can see where it drops back and then we get the V spike out. We've got a bullish engulfing candle. So we buy this one. It's at $300 a share, $310 a share. We buy this one. It's bullish engulfing on the previous week and we get 1, 2, 3 weeks. And on that red candle that we get there, that low testing spike, we take our profits. But in the next couple of weeks, we've still got that rising 52-week moving average, but look at what happens. Look at the price action in the next couple of weeks. It's pretty flat. So we wait here, nothing really happens. We stay below that 360 level, and then we slowly grind higher. But we don't like the look of this one, so we wait on this one. We've got that rising 52-week moving average, but there was no clear bounce off the 50 or no clear V-spike bounce for us to enter this one. So it does indeed grind higher until this week we reached $500 a share for Nvidia. These markets have had an absolutely stellar run, a fantastic run to close at the highs where they are now. But let's consider a bubble or overbought. Well, let's look at the RSI. We're above the 80. Remember, how high can it go? That's right, 90 or 95 a stock can go to and still be overbought. But this is starting to look like we're going into correction territory, and this market should correct back from this price that we've achieved that really now is looking overbought. So let's look at AMD. So here's AMD, Advanced Micro Devices. Let's start about a year ago. Let's look at, there's August, end of August, beginning of September. We've got multiple weeks of selling there. It drops all the way back to the rising 52-week moving average. So we've got that rising 52-week moving average. The market drops back there. In September, we can see that clear bounce off the 50. We love a bounce off the 50. It's a beautiful entry point. So we've got that bounce off the 50 on the RSI. We've got a candle that closes at $30 a share. This is in the first week in October. We take that one and we get 1, 2, 3, 4, 5, 6, 7 weeks in a row. We get a high testing pin bar at $40 a share. The next week's a red candle and we take our profits at $40 a share. But we can still see there, we've got a rising 52-week moving average. We've got a low testing pin bar in the first week in December. This is the setup for us. We love that low testing pin bar. It shows that the market went down. Buyers were there. They bought the market all the way back up to the high of the week and it closed at the high of the week. We love that candle. $40 a share. We buy this one again and we get 1, 2, 3, 4, 5, 6, 7 weeks in a row. On that 8th week, at $50 a share, on that high testing pin bar, we take our profits. Then the market drops back to $45 a share. The market goes there to that swing low at 45. The next week, if we look at the RSI, there's the V-spike. The market moves back up from 45 to 50. There's a clear V-spike on the RSI. We buy this one and we get 1, 2, and on that third week we run all the way up to $60 a share, but it's a high testing pin bar. The bar is red, and so we take our profits. Lovely little 3-week trade. Then the market drops back. It's obviously the COVID situation. We drop all the way back to $35 a share, and the market has a bounce there off the 52-week moving average. We can see on the RSI in March an inverse head and shoulders. By the time that pattern is complete, we close that week at $50 a share. So we buy this one and we get 1, 2, 3 weeks out of it. On that huge red bar, we take our profits and we're out at $50 a share. Then the market goes very, very flat. There's nothing really there for us until June. In June, the market drops back. The RSI, have a look at that one there. Market drops back as a V-spike off the RSI, off that median 50 level. We buy that one in June and we get 1, 2 weeks out of it. And on that third week, we get a red bar, a low testing pin bar. It's red, so we take our profits at $55 a share. Now we look at July and we can see that this is just a spike move. It was a low testing pin bar. The following week is an absolutely explosive bar that goes from $55 a share all the way to $70 a share. We love this one. We know this market's on fire. We've got a rising 52-week EMA, so we buy this one again and we get 1, 2, 3 bars in a row. We love that one. The market gets a red bar the week after that closes just over $80 a share, and we take our profits. But what's happened since then? What happened last week? Well, last week we had this interesting little low testing pin bar. Now we had a low testing pin bar. It was at $80 a share. The market bounced off the 80 level and closed at 85. Now we haven't been able to get through that 85 level. That makes me think we could either get through this week because a market can go oversold up to 90 or 95, or there's a resistance level building at the 85 level. Look at the RSI in August. We did bounce off the 80 level. We're trying to go back there to the 80 level on the RSI. That's resistance. That's the overbought level. And if we can't get any higher than that, this market could find a resistance here and fall back. Is it a bubble or is it overbought? At this stage, with the rising 52-week moving average, as we said before, it's just looking overbought. It looks as though it will drop back to the 52-week moving average and the bullish move will continue. However, if we failed at the 52-week moving average and went right through, then it was a bubble and we have to correct a lot harder. Absolutely amazing week that we've had. Absolutely amazing next couple of weeks as the markets make it clear exactly which way this rally is going. We know it can't have that much more because it's currently overbought and it needs to correct in the next week or two. Now, I've talked about things here that sometimes people don't understand if they're new to the channel. Double bottoms, inverse head and shoulders, where to buy, how many weeks in a row, how do you know where to buy, how do you know where to take profits, where do you set your stops. All these things are covered in the strategy video. If you have a look here, there's a strategy video. I'm popping that up for you. Have a look at that and it will explain the strategy of momentum trading, how we used to use it when I was in the city trading for the bank. And if you look at the other video, if you're more into trading the indices, that one will explain that there for you too. So I hope that's been informative. Until next week, we can build upon what you've learned this week. We can see what happens in these exciting markets. But until then, thanks for watching. Take care.